And welcome to this special edition where we are looking at an all-important macroeconomic number that is only minutes away from release, the advanced GDP estimate numbers for the entire FY17. It will be announced by the CSO, but we have to make an important clarification. It is possible that the estimates for the full year may not include the impact of demonetisation and hence may not be construed as an indicator of the actual economic growth this year. We have it from top sources in the CSO and from former inmates of the CSO that the Central Statistical Organization only believes in extrapolating existing data. That is the data that they already have, multiplied by the number of months, divided by the number of months and multiply it by 12. That is basically extrapolate and seasonally adjust the data. They have at the moment data for IIP up to October 31st. They have GDP data up to September and core sector data up to November. And they are merely going to extrapolate that data. The big intervening event of demonetisation is not something that the CSO is going to try and weave into its projection, because it is indeed not a projection, not a forecast, but merely an extrapolation, is what we understand from former CSO officials and some current officials. My colleague Ekta Batra is also with me. Ekta, we have our guests, Soumya Kanti Ghosh of SBI, Anubhuti Sahai, the economist of Standard Chartered Bank, Abik Barua, the economist of HDFC Bank. First, welcome all of you. Before I get to you, my colleague Ekta did a poll. So, Ekta, just take us through the highlights of the poll.
Well, along with demonetisation, the economists are expecting a consensus of around 6.8%, which compares to 7.6% on a year-on-year basis in terms of GDP, and the range is anywhere between 6.7 to 6.9%. Agri 3.1 versus 1.2%, with a range of anywhere between 3 to 4%. Industries, including construction, at 5.5 versus 7.4%, with a range between 5 to 6.3, and services without construction too is expected to fall around 400 basis points to 8.5 versus 8.9%, with a range anywhere between 8.2 to 9.2%. So, Latha, what we are expecting is at least an FY17 GDP estimate to come in at 6.8%, along with the impact of demonetisation. Okay, so that basically will mean agri still looks good because it's a harvest, it's a good harvest after 2 drought years. Industry falls by 2 percentage points according to your estimate, and services, falls only by about half a percentage point. We are still awaiting the advance numbers on the PIB website, and there will be a press conference which Dr. TCA Anant, the Chief Statistician, will address. We are minutes away from that, so let's get to our guests. Soumya, what are you working with, and do you also believe that the CSO is likely to merely extrapolate?
Yeah, I broadly tend to agree with what you said just now. I think that today's estimates is unlikely to...
Okay, India, Soumya, just a minute. We have got the number. India pegs, that is the CSO has pegged the GDP growth at 7.1%. and the GVA at 7.0%. So GVA has been pegged at 7% and the GDP has been pegged at 7.1%, which in itself would mean a 0.5% fall from previous year. But we still don't have anything more in terms of whether it has come with a proviso. The PIB website still doesn't have anything of that order, so we will have to wait for more details. All we have from the wires is that it's 0.5 percentage point cut anyway. That's all we have. I don't know if this does not include. Soumya, I'm really sorry for interrupting, and I expect I will have to interrupt you again if I get more data. But your thoughts on this 0.5 percentage point cut? Okay, sorry.
I think the estimates are exactly in line with what we were expecting because...
Okay, Soumya, I'm really sorry. I'll have to interrupt you again. That's because we've got now the nominal GDP growth number at 11.9% compared to 8.7% year ago. So I'll just read out all the numbers for you. Agricultural growth is seen at 4.1%. So that's an improvement over what even our poll threw up, 4.1% versus 1.2. Manufacturing has been pegged at 7.4% versus 9.3. So that's a 2 percentage point fall in manufacturing. Nominal GDP is expected to come in at 11.9% compared to 8.7, which will mean a fairly decent GVA growth, because this year inflation has actually been lower than last year. Last year was only 8.7% nominal growth. Construction is coming in at 2.9. Now that's bad. Compared to 3.9 last year, it's coming in at 2.9%. Mining is a contraction of minus 1.8 compared to a growth of 7.4% year ago. Those are the key numbers that we have as of now. We are still awaiting whether there can be any, any addition by way of clarification from the CSO itself, but we don't have. Soumya, once again, your thoughts.
See, I'll very quickly, two things are important over here. The first thing is that if you actually look into the RBI estimates, the GV estimates are 7.1%, and I think CSO has pegged it at 7% as per the data you just said. So, and if you look into the historical trends also, the gap between the two estimates is around maximum 20 basis points, either plus minus. So that is exactly in line with what we are thinking. And the other thing is that the next estimates, the provisional estimates, which will be released in May 2017, I also don't think it will be too much different from these estimates, because again, there also, if you look into the final estimates, basically there are 3 revisions plus the provisional estimate. The gap between the two estimates are actually 20 to 30 basis points. So we are already working with a number which could be lower than 7% if we look at the historical trends. And on the top of that, there will be the impact of demonetization.
Okay, we also have the industries data cumulatively, which has come out, and that is pegged at around 5.2% versus 7.4%, and this includes construction. And services is now coming at 8.8%, which compares to 8.9% year on year. So that isn't actually too bad. It's expected to be flat on a year on year basis, obviously with the caveat that we don't know what the impact of demonetization.
So it is actually industries which has been seen at about 200 basis points lower, a 2 percentage point cut, and construction coming in 1 percentage point lower, which is contributing to this half a percentage point fall from the previous year's levels. We are still awaiting anything that we may get in terms of the full year estimates in terms of a proviso, but we don't have anything as yet. We'll come back to you in a minute, Soumya. First thoughts, Abik?
We had a number of 6.7%. A 7% number doesn't seem to be significantly higher than that. So I suspect some aspects of demonetization have been, introduced into the extrapolation exercise, although the principal, part of the estimation would involve an extrapolation. But the numbers don't seem quite bizarre. So there could be some revision going forward, but on a couple of things like agriculture and so on, they're in line with our estimates, and I don't think they need to be revised. And I think it's actually a reasonably conservative estimate, and I suspect that there is some element of the demonetization phenomena in there.
Well, let me get Dr. Pronab Sen in, the former chief statistician, and of course made policy in several spaces, including the Planning Commission. Dr. Sen, thank you very much for joining us, sir. Actually, I only have the details of the numbers coming from the wires and don't yet have the release itself to know whether there is a proviso or a disclaimer or an explanatory note. Sources in the CSO told me that the numbers will be released with an explanatory note, but I don't have that note yet. The number itself, for your benefit, sir, the full year GDP has been pegged at 7.1% compared to 7.6 year ago. GVA pegged at 7.0% versus 7.2. Farm growth is, of course, 4.1, much better than the 1.2% year ago. Nominal GDP growth at 11.9% compared to 8.7% year ago. And now the split, again, all real terms. Mining contraction minus 1.8% versus 7.4. Manufacturing 7.4 versus 9.3. Industry without construction is 5.2 versus 7.4. Construction itself 2.9 versus 3.9. So those are the two areas where there's this steep fall. Industry 5.2% and construction 2.9. Overall manufacturing 7.4. The services growth almost the same, 8.8 versus 8.9. Once again, sir, for your benefit, I do not know if there is an explanatory note. We only have these numbers. Your first thoughts, sir?
Well, it's they have clearly, this is something that would probably have happened if the November IIP had been in. So I suspect that they have taken that into account because the numbers would be with them. And they haven't, IIP gets released later, of course. So yeah, I mean, it's pretty much on par. But I don't think the full effect of the demonetization has been factored in. They have probably gone by the November IIP number.
Okay, I don't see any proviso here. At the, I mean, the PIB. Yes, sir.
There are two issues involved.
Yes, sir.
One, of course, is that the important number now is the nominal. It's not the real so much. And the nominal is high.
Yes.
Which means that if there has been any fall in agricultural prices, I don't think it's come in because the WPI numbers are not in yet.
Okay. So they have given us a nominal GDP growth of 11.9%.
Yeah. So that's, you're talking about essentially 4.8% rise in the implicit GDP deflator.
Yes. Yes.
That sounds high for the moment. Yeah.
Okay. But your theory was that the CSO would not have included the demonetization impact. Now you feel they probably have included the November IIP in this?
They would. No, this is the thing that the November IIP, some of the IIP figures would be in.
Yes.
So it would be correct for them to take that into account. But the manner of extrapolation should remain the same.
In which case, you are saying that the actual number, when we get the actual numbers on May 31st, could be lower because the December number is not in?
Yes. In fact, you should get an indication of what is happening once they release the third quarter GDP numbers.
Okay.
Dr. Sen, just a quick question with regards to industries with construction, because our poll along with demonetization was estimating it at 5.5% and it's come in at 5.2%. So do you think that that would be a reasonable assumption with demonetization?
Given the data that's used, yeah, it would probably be reasonable because again, as I said, that the IIP captures only the larger units.
Yeah. Dr. Sen, maybe I have to interrupt you because we've got information from our reporter who is at the press conference, which is just about to begin, that this is only 7 months data extrapolated. Dr. Sen, we have Professor Anant speaking about it, so we're just cutting to Dr. Anant, the Chief Statistician. Thank you, Dr. Sen, for joining us.
Government wanted earlier estimate of GDP for the full year, and in view of that, we had notified last month a decision that we will prepare an earlier advance estimate, which will be released typically on the 7th of January, but in this case, since 7th is a Saturday, we are releasing it on the 6th. We had also indicated in that we will revise this estimate along with the third quarter release, which is now proposed to be done on the 28th of February. This estimate has been uploaded. A copy of that would be available to all of you. I will not take a great deal of time going over the estimate and its details. Those are there in the press note. But briefly, the GDP for the full year is estimated at 7.1%. This is compared to 7.6%, which was reported last year for 2015-16. And the GVA in basic prices is estimated at 7%, which is compared to a growth of 7.2% over the last year in the same period. The methodology for computing these estimates is the same as what was done for advance estimates earlier, which were released in the month of February. In other words, it is what is called a benchmark indicator approach. The benchmark which is being used is the provisional estimate of GDP which we had released in the end of May. The indicators are detailed in the press note, but are fundamentally the same indicators which were used in the month of February. The only difference between this estimate and the estimate which used to be released on February is the time period over which data is available. For the most part, data is available for the month of October. In some cases, it is available up to the month of September, and in a very few cases, it is also available in the month of November. The detailed availability of data is indicated in the press note where sector-wise calculations are given, and we have also indicated how that data has been broadly handled. Of course, it's not possible to give exact calculations and so on and so forth here, but broad details are given on how the methodology has been applied in each one of the segments. I think what may be important to emphasize is that while we have followed this practice across the board, there are some special efforts which we have taken to make sure that these estimates will in fact, in our judgment, be reflective of the full year estimate. Specifically, I would like to draw attention to the estimate which is made in the area of financial services, insurance, real estate and professional services. In this category, one of the indicators which is used relates to the growth of bank deposits and credits. Data for which was available for the full month of November, but in view of the government policy of denotification of notes, the volatility in the underlying figures, particularly the growth in deposits, was felt to be an outlier, and therefore a conscious view was taken not to include the estimate for November in calculating the estimate. This has marginally affected the overall estimate by keeping it. Please repeat that last part, sir. That's the operator part. All right, I'll try to. In the area of whatever it's called, financial, insurance, real estate and professional services, data, one of the indicators used is aggregate bank deposits and credits, data for which is available for the full month of November. However, as you will see from the press note, data only for the month of October has been used. The reason for this is that the figures for November were examined, and it was felt in view of the policy of denotification of notes, there is a high degree of volatility in these figures, and a conscious decision was taken not to base the projection using the November figures, but instead, for the moment, work only with the October figures. This is an exercise which we will, of course, carefully review and monitor over the next quarter, and a suitable decision will be made with regard to these figures in later estimate as well. As far as the rest is concerned, the details are given. By and large, the slowdown is on account of observable indicators which have been available to you and have been published, particularly with regard to index of industrial production, which has shown a slowdown, continued slowdown beyond the first half in the month of October as well, and that is therefore reflected in the overall projection. I will not spend much more time on going into the specifics of different segments, but I can include those if any questions are asked with reference to them. Thank you.
One by one.
Why don't you take this?
Yeah, one.
You take them and you
One,
answer.
1 minute, let us see.
Sir, as you very clearly said, that it will, the department will clearly monitor the figures of November and December in the banking financial services sector. As you said, these figures are highly volatile. When you come up with again the revised estimate in February and later on with the actual estimate, do you think coming up with these 2 months, that is November and December, when there were high number of deposits, will it actually reflect much more than what is the actual figure?
Let me take the line. I will be very careful in not speculating about what will be in the revised estimate. When I present an estimate and how I've examined the data and what approach I've taken, I will explain at that stage. At this stage, since it is in public knowledge that the November figures are available, the fact that we have not used them required me to comment, and I've done that. What exactly will be the approach and to what extent they will, how will they be used in later revisions, I will leave for later releases.
One minute, please. One minute, let him finish. I'll come back to you.
Then can one say for sure that when you come up with your February 28 estimate, you are likely to factor in the volatile deposit flow that happened in November and December? We are not asking about your approach in the revised estimate. We want to know about your approach for the February 28 estimate.
Okay. If you read our document which we have uploaded in the website relating to modification of the release policy, we have very clearly stated that the estimate which will be produced along with the third quarter estimate will be statistically equivalent to the estimate which was produced in February 7th. More or less the same data which was available in the month of February, which means virtually the full quarter data on most things, including IIP. Most of the third quarter data on corporate financial filings would have been available by them, but whatever is available, because that is a dynamic process, we will take as much of the data as available. And similarly, second advance estimate of agriculture. Remember, this is still based on the first advanced estimate of agriculture. All of those will be incorporated. Those will be the basis for the estimate which will be released in the month of February.
One minute. I'll call you.
सर, वित्त मंत्री ने और वित्त मंत्रालय की तरफ से कई बार औपचारिक तौर से कहा गया है कि अगले 2 क्वार्टर तक नोटबंदी का असर दिखेगा और स्लो डाउन देखने को मिलेगा। आपको लगता है कि आपने 7.1% का अनुमान दिखाया है, ये आगे चलकर इसमें नीचे की तरफ गिरावट देखने को मिलेगी?
ऐसा है, मैं जो आंकड़े जिसके लिए नहीं अवेलेबल हैं उस पर टिप्पणी नहीं करता। हम अपने रिवीजन एस्टिमेट्स और रिवीजन आंकड़ों के बेसिस पे करते हैं, और इसलिए मैं ये टिप्पणी नहीं करना चाहता कि आगे चल के बढ़ेगा घटेगा, और इस पे कई राय हैं और कई मत हैं, इसलिए मैं ज़्यादा टिप्पणी उस पर नहीं करूँगा। अभी की तरह आंकड़ों पे जो दिखता है और उसके बेसिस पे जो हमने अनुमान लगाया है वो अभी मैं बता रहा हूँ।
So Shubham from Prudential. So in the current data that you produced for FY17, the advanced estimate, what are the chances of error given that a lot more volatile data is yet to be available? So when you produce your second advanced estimate, looking at the current one, what are the chances of error? What's the scope of error that you see currently?
You know, that is not so easy to answer. Our general experience has been that aggregate processes tend to have a considerable degree of stability, and in the estimates which we release in advance have tended to be in very close proximity to the final figure. There is a considerable measure of momentum and continuity in economic processes. Therefore, it is unlikely that on ordinary courses, it would be unlikely that there would be major change.
So that's now, this is a special year, right? So
look, it's a very funny statement. Because it is not an ordinary year, therefore, nobody's statement is fact-based. Now, under those circumstances, asking the statistician to make a fact-based assessment if there are unusual policy changes, what we are doing is we are carefully monitoring the data and using the best approaches which is available in our judgment to use the data appropriately.
So, Gaurav from ET now. You mentioned that in most cases data up to the month of October and November is used. Of course, I just want to ask on the question of the denotification of the old notes. Does this then mean that in these estimates, the impact on economic activity due to the denotification of old notes has not been taken into account? If it has been, sir, how has that been quality?
Let me, the problem is, there is no formal indicator which we use which is directly based on the nature of money supply. The denotification impact will operate through a variety of indicators. Most of our indicators, if you notice, are based on actual performance. Whether it is the index of industrial production or corporate financial assessments or agricultural output, these are assessments of actual output. Now, as and when these assessments are made, if there is an impact on behavior, it will be captured in those assessments and will be reflected in our estimates. We are not in a position to speculate further than that, and as a conscious approach, we do not take untried or unverified, unsubstantiated methods to make adjustments to GDP. This is a good housekeeping practice because at various points of time, different people have different expectations about what the growth rate should be or different features about what it should be. It is a safe practice to stay with whatever is reflected in the actual outcome-based data.
One minute.
You pointed out that financial insurance, real estate and professional services data is the only data where you have not used the November figures. So are you indicating that is the only vulnerable sector to demonetization, or there could be other anomalies as far as demonetization?
Insofar as the data on deposits and credits is concerned, the short time frame in which to assess the data, because it was basically 1 month's data, is a consideration which weighed with us when we were trying to make the projection. It is possible that going ahead, there may be a permanent change in the structure of deposits and credits. To the extent that happens, those will be factored in appropriately in later exercises as we go ahead. We did not have enough time series data to make that assessment at this stage. That's why.
Okay, well, I think it's very clear that they have only gone with 7 months data. They did have November data for deposits, but they have chosen not to take it because it is an outlier. Abhik Barua, what did you make of the sum and substance of what Dr. Anant is saying? It appears to me they have not taken into account any of the data of the demonetization months because it was not available to them.
No, I think it's, Anant is right in not taking some of the, obvious outliers like the November data or even, the December data for credit growth that we got recently. I think that's sensible. But to assume the kind of momentum that holds for other years and justify extrapolation is possibly not relevant this particular year. So I think there will be revisions downwards. And if you just look at it from a first half, second half perspective, they are roughly working with, compared to a first half growth of 7.2, I think they're working with about 6.8, 6.9 for the second half. I would peg the second half to around 6.2%, which maps into about a 6.6 to 6.7% for the entire year. Some corrections are due, but I think it's sensible to avoid too much extrapolation from November.
Fair point. We have to come to Anubhuti as well, but we have Dr. Pronab Sen back with us. Dr. Sen, exactly as you said, they have taken only October data up to October, IIP data up to October, corporate results data up to September, and they had, of course, deposits data of November as well, but they have chosen not to include it because it looked like an outlier. Therefore, as Abhik just explained, since they have got a GVA of 7.0, and we know that the GVA of the first 6 months was 7.2, they're obviously working with a 6.8 GVA for the remaining 2 quarters. Would you say, therefore, the actual data could be something else?
Yeah, because what they're working is, remember, the weight of the second half in GDP is about 60%, as opposed to about 40%. It's a little over 40% for the first 2 halves and about 60%, little under 60% for the second half.
Okay.
So they're working, I think, closer to 7%, which would pretty much square with the data that is available up to October. I am actually glad that they haven't used the numbers that have come in for the IIP for November. They would have got some of the numbers.
Okay.
But the problem that they would have is that because the data comes in, spread out over time, it isn't clear that the data that would be available to them would actually be representative of the industry.
Fair point.
Okay, so if they haven't used it, I think it's a very good thing.
Okay. So if you can hold on, I'll just take quick comments from our other economists. Anubhuti Sahai, 7.0 is the GVA, and based on 7 months data, what is yours and what are your comments?
We are looking at 6.8%. Just 3 points which I would like to make here is that, first is there is a lot of uncertainty, and like CSO, we all are struggling with it. Whether we go up from here or down, that is something, that's the biggest question for all of us. Second point is in terms of data availability and across all sectors, I think one of the sectors where we face most of issue is related to industry. IIP, we do not have data for November. Probably CSO has some information on that part. But the biggest, 60% of it, 60 to 70% comes on the basis of December ending quarter corporate performance.
Yes.
Absolutely no view on that. We just have earning previews and they all indicate that it will be bad. So there is, a swing can happen on that particular front. And third bit is on services. I'm not actually surprised by this robust services sector growth of 8.8%, even though they have not taken into account 15% deposit growth, which is the latest number as of December 23rd. If you look at the sales tax growth for 6 states, which almost account for 45% of total states' sales tax collection, or for that matter, if you look at the cargo traffic, both passengers as well as cargo and passenger for both air as well as port, they have been doing pretty well. So at least till November, October, November, whatever data we had on services, we're not really surprised that it has been reflected similarly on in the advanced estimate. Going forward, like everyone else, we'll be also watching out what are the swing factors. But as far as our house view is concerned, we are looking at a 6.8% kind of a GDP growth for FY17.
Okay. Well, now there is a specific problem, Shaumyo. There is the budget numbers assumed GDP growth, nominal GDP of 150 lakh crore. Now with the 11.9%, that was 11% growth assumption. Now with the 11.9% assumption, the GDP is coming at 152 lakh crore against a budget assumption of 150 lakh crore, which was 11% growth. So now do you think that the budget numbers will actually be based on wrong numbers? You will have a fiscal deficit which will be 3.5% of 152 lakh crore, when perhaps the actual number will not be 152 lakh crore. Shaumyo?
No, yes, I think that could be a possibility. I mean, if you look into the no, what you said is absolutely correct. I think here the problem is that the COC is also working with estimates, and it's actually in a predicament because it doesn't have it has the data, but it cannot use the data because of the volatility. So my sense is that there will be budget estimates. I think the Finance Ministry will go with a specific fiscal deficit number which is in his mind, instead of looking at the overall nominal GDP numbers in this case. Because the point over here is that if you actually go by the CSO estimates today, it will be very difficult to reconcile with the budget estimates which the Finance Ministry is looking into. And the other important thing I would just like to point out, I just noticed from the data is that there is actually a distinct slowdown in the trade, hotels and transport sector. The second quarter, the second half estimates is actually at 4.5% against 7.6% in the first half. So some amount of slowdown possibly has been incorporated, but I am surprised that the finance insurance sector is actually logging in a higher growth rate in the second half compared to the first half, and there is the sector which will show the maximum revision when the next estimates are out in May 2017.
Okay, well, actually, that point to you, Dr. Sen, financial, real estate and professional services include both, deposits and credit. Deposits will have actually grown very sharply, even up until March, if the withdrawal limits are what they are. Credit, on the other hand, will be flat because people have paid back with old notes. So the total outstanding loan is actually gone down for banks or remained flat. So how will this change? Shaumyo says that is the number which will be revised lower. Finance and real estate.
The thing is that in the final estimates, you use, if I try to use both the credit and the deposit. But when you're working with the quarterlies, you don't have the data on credit.
Yes.
The data that comes in is in fact only on deposit. And so what is done usually is that you assume a constant credit deposit ratio and work on that, which is probably why it's showing up this way.
Okay, so you would agree with Shaumyo that will be the one that will be revised lower?
It will be revised lower, and the thing is, a lot of things can get revised lower.
Okay.
But the thing that really puzzles me, as I was pointing out, is the price data. Because if you look at WPI, over the course of the year, it has hung around just barely above, the CPI has hung just about barely above 5%.
Yes.
And the WPI has been significantly lower than 5%. And since WPI has the larger weight in the implicit GDP deflator, I would have expected the deflator number to be lower.
To be 4?
Lower.
To be closer to 4, yeah.
Okay.
This would have been my expectation.
Okay, yeah, at the moment we have a GDP of 7.1 and a nominal GDP of 11.9, which you say is indicating a much higher deflator than is actually the case.
That's all. If you go by what the past trends in the WPI and CPI have been. Okay. Now I haven't had time to work out what would be the new weighting diagram, given that the shares of the different sectors have changed, but a difference between about 4.1 and 4.8 seems a little large.
Okay. Dr. Sen, just wanted your thoughts about the trade, hotels and transport, because a lot of the data being recorded, such as commercial vehicles, cargo at seaports as well as civil aviation, is accounted for April to November. So the estimate is 6% versus 9% year on year. Do you think that that's a sufficient enough expectation post demonetization for the entire fiscal?
That is difficult to say because on the quarterlies, because even we are still working with quarterlies, you are not working with annual data. On the quarterlies, you look at the changes that are happening rather than the absolute numbers. So you're looking at essentially sort of quarter-on-quarter movement. So I don't know. I mean, one would have to rework those figures.
Okay. Well, we have Indranil Pan also joining us, the IDFC Bank's chief economist. Indranil, thank you very much for your patience. You've heard all the numbers now. What are your thoughts and what would you, how much credibility or how much importance would you give this number?
For the full year, we are working with a 6.7% GDP estimate, much like most of the other economists that you have been talking with. Now, obviously, this number that has come out is broadly an extension of the Q1 numbers because they anyways had a 7-month number to work with. So obviously, the expectation would be that as newer sort of information come in, as newer data come in, which would reflect the impact of the demonetization, the third quarter number would possibly be sharply lower than the second quarter number. while we expect that there would be some sort of a revival sense that will come in the fourth quarter number, hoping that a lot of the currency comes back into the system by the second half or the fag end of the fourth quarter. So I think a lot is in terms of sort of academic interest. Now the most crucial sort of implication is in terms of how we factor these numbers into the budget, where thankfully I think the nominal growth numbers will be taken into consideration. So the government possibly would be working with an 11.5% for this year and also for the next year in terms of the budget estimate is the sense that I can provide.
Okay, in which case, you know, both the fiscal deficit numbers for this year and next would kind of be overstated or give the government a little more elbow room than perhaps the reality if actually we end up with a nominal GDP much lower than 152 lakh crore, which may well be the case. Abik, therefore, what happens to, Dr. Sen, what happens then to the credibility of these numbers? You're getting a fiscal deficit of 3.5 as a percentage of 152 lakh crore. So you will probably end up spending more, or say that I actually achieved a 3% or a 3.3% fiscal deficit. Will all this ring hollow?
Well, you know, I don't think that that is really a matter of grave concern.
Okay.
You know, given what is happening, even if the government stretches the statistics a little bit in terms of what they report in the budget, I think as an economy we need the additional government expenditures. So let's not carp about the use of numbers.
Fair point.
Let's talk about what was going to happen to the economy.
Okay, so we may have a little bit of fiscal stimulus without being seen as reneging on the number, which will all be for the best, according to you. Sir, we have to wind up this conversation. I just want one number from all of you. Since the GVA and GDP number of TCA Anant is lower than the previous year, even without taking into account the months of November and December, will any of you want to revise your numbers? So please give me your number and tell me whether you have a negative bias or no bias to your number. Let me start with you, Shaumyo. What's your GVA GDP number? Will there be a further revision, lower or higher?
See, we are working with a GVF of 6.5 and a GDP of around 6.7%, but we are factoring it a downward bias in the GDP estimates because we believe the GDP numbers could go down to 6.5% or a tad below that. So there is a negative bias in the 6.7% GDP estimate which we have factored in for the full year.
Okay. Anubhuti?
We're working with a GVA estimate of 6.6 and for a GDP at 6.8. I don't think I have got any additional information at this particular moment to bring in any kind of bias. So 6.8 looks pretty good to us.
Okay. Dr. Sen, since anyway Anant and his team are looking at a weaker second half, even without any of the demonetization data, what is your sense that we may end up in? Would we end up closer to 6.5 this year in terms of a GVA?
Well, in terms of the sort of straightforward quantity theory approach, I would be estimating it at significantly lower, with the GVA at somewhere around 6 and the GDP growth at about 6.2 or thereabouts.
Sorry, sir, I didn't get you. What is your GVA estimate? Sorry?
6.
Oh, it could get as low as 6, you think?
Yeah, yeah.
Okay.
Okay, that's a rather serious number, yeah.
Yes, absolutely. Dr. Sen, just wanted to ask you that if you are expecting FY17 GDP at 6%, how would you break it up between Q3 and Q4? How much could it slump in Q3 and how much could it recover in Q4?
In fact, my sense is that Q4 is going to be a little worse than Q3.
Okay.
What would
I'm looking at Q3 at being somewhere in the 6.5 region, and Q4 being closer to 5.
Okay, yeah, obviously because Q3 had 1 October at least, which was okay, and perhaps the first half of November before the cash crunch really hit. Yeah, that could well be the case. Indranil, what are the numbers you are working with, and would you want to add any bias to it?
Yeah, GVA is at 6.6, GDP is at 6.7, immediately no bias. I would probably want to relook at the numbers after the Q3 numbers come out because everybody is sort of taking a shot in the dark, so as we are.
No, but y'all are bankers. Y'all have some idea of how things have progressed on the ground. So I will ask the same question to Soumya in a minute, but do you get a sense that, there could be more dragging of the feet on further loan growth, perhaps more NPLs in the SME segment? Anything that gives you a sense there could be a lower bias, or is that already worked in? Okay, Mr. Pan, I was asking you that.
Okay, no, I think you're right in the sense that we have already sort of taken in a lot of these anticipated momentum that could happen in terms of the demonetization exercise. So as I said, it is the best case estimate that we have done, taking into consideration a lot of these factors that you pointed out. So if any change has to happen, it has to happen on incremental data flow, which would be the Q3 is the earliest that I think we will be able to change our GDP numbers, if anything else.
Okay. Anupati, come in on a couple of these statistics which are actually provided for the April to November quarter, which comes under trade and services. So, for example, railways, the net ton kilometer and passenger kilometer is expected to decline 7.4 and 0.4%. Cargo at seaports is expected to grow 6.8% for April to November as compared to 3.4% year on year. Passengers and cargo handled in civil aviation is up 19.6% and 9.9% respectively. This is better than the 16.5% and 5.9% same time last year. And commercial vehicles is up 4.7% versus 8.1%. So if you look at it, it's really commercial vehicles which has taken the maximum hit, but the others are not too bad, say barring railways. Your thoughts on these statistics?
It pretty much captures what's happening, at least in terms of data, what we get to see. As I mentioned previously, in fact, what you mentioned that in H2 FY17, probably the trade segment was not doing that good. That comes as a surprise to us. Because if we look at the whole host of data, everything has been holding up well, or there has been an improvement in this particular segment. How it pans out in the next 4 months, that is from December to March, that is something which we'll need to watch out. But in terms of hard data and in terms of it getting captured in the CSO print, probably that is kind of not tying in, and that's where we think probably that the CSO has tried to build in a little bit of slowdown for the remainder of 4 months. One point which I would like to mention here, Ekta, not connected to your question directly, but I think worries around GDP, nominal GDP growth at 12% and its impact on budget mans are exaggerated. If you really look at the 11% or 12% kind of a nominal GDP growth, the impact on fiscal deficit is just 5,000 crores. So I think there are these worries are exaggerated, and whether we are talking about fiscal deficit number for this year or next year, or in terms of expenditure elbow room, not much changes whether we get a GDP growth of 12 or 11%.
And what would your fiscal deficit estimate be from the budget this time? You expect the 3% target to be maintained for the next fiscal?
Yeah, it's a very close call. It would purely depend upon the finance minister's assessment on how he sees the impact of remonetization on economic activity, how he sees in terms of windfall gains of this remonetization exercise on revenues, and also the need to keep in mind what can be the possible negative impact if GST actually gets implemented in FY18 itself. So there are a lot of uncertainties for which the finance minister will have to find an answer, not an easy time at all, especially given that they're trying to prepone the whole budget presentation day by a month. So it's a close call. If they think, given so many changes happening at the same time, if they think that the government needs to provide support, they are likely to go ahead with a 3.3%. But as our house view is concerned, we are looking at the 3% fiscal deficit target, which we think the government can manage, even if it factors in higher subsidy burden, higher interest payment burden, or for that matter, even some income tax and corporate tax relief.
Okay, well, actually, I forgot to mention the GDP from the expenditure side is actually looking very interesting. if you looked at the final private final consumption expenditure, it goes up from 63 lakh crore to 67 lakh crore. That is actually a growth of 6.5% private final consumption expenditure. But sir, look at the government final consumption expenditure. It goes up from 11.2 lakh crore to 14 lakh crore almost. And that looks like a growth of 20% to me. Isn't this assumption a little strange, Dr. Sen?
No. The government final consumption expenditure includes the pay commission effect.
Oh, okay. But that would account for such a big jump?
Yeah.
Okay, actually it's a
I
24% jump.
For the full jump.
24%, sir.
Yeah, because between, you remember this is happening, you have both the revised pay scales as well as payment of arrears.
Okay. All right. So that might perhaps account for some bit of a push to demand. One hopes.
Would account for about 25,000 crores basic, plus add to it another about 15,000 crores, that would account for 40,000 crores.
Okay, so that straight away would be a very big jump from probably 11 lakh crore to, yeah, it's about a 3 lakh crore more, of which, as you say, about 50,000 crore is accounted for by the pay commission itself. The other intriguing number is the gross fixed capital formation, which is actually almost the same, minus 0.2%. Shaumya, you want to comment on that? Does that look like an underestimation?
I tend to agree with the point. I think the gross fixed capital formation number could be revised downwards because we are not seeing the investment climate, any pickup in the investment climate as of now. So I think that number could be revised downwards. But one point I just want to mention, and I would like to echo Dr. Sen's point regarding the Q3 and the Q4 growth rates. The problem currently is that why you are saying that the GDP numbers is with a downward bias. I think there are two shocks which has been given. First was the liquidity shock, and the next is the spending shock. Currently, the problem is that even as the RBI is replacing the old currency notes, people are actually not spending. So therefore, that money is not materially coming back into the system, and therefore that is actually perpetuating the shock. So in the sense that the banks are unable to, say, fix the CDM machines, the ATM machines. So that in itself could actually precipitate a larger than anticipated shock to the economy than what was expected. So basically, the point is that there could be a downward bias to the estimate of 6.7%, which we have built into our assumption.
But you are still sticking with a maximum of 6.5 because Dr. Sen is working with 6%. Shaumya.
No, we have already said that the numbers could actually, the GV at 6.5 we already said with a downward bias. So we are already expecting a downward bias, but as of now, we'd like to go with the numbers until we receive further information.
Fair enough. A final question to you, Anubhuti. You heard the private final consumption expenditure estimate, advance estimate, 6.5%. Government final consumption expenditure, growth of 24%. And gross fixed capital formation, minus 0.2. Any thoughts?
I'll just like to point it out on gross fixed capital formation. Surprises quite a bit because if you look at the H1 FY17 gross fixed capital formation number, I remember it was in contractionary territory. I mean -1 or -2 or maybe even more than that, which effectively means that in the second half they're building in a little bit of a positive growth, which comes as a surprise to us. We would expect this number to remain in the negative zone, as already highlighted. Capital expenditure, whether you talk about the central government, has not been doing that well. In fact, if you look at the CMIE data for December ending quarter, there is a slowdown there, especially if you break the data for this particular quarter pre-November 8th and post-November 8th. There is a sharp slowdown, almost say 60% if we just focus on new project announcement, which ties in very well with project under implementation for next quarter. 60% of project announcement in December quarter came before November 8th. That is just in the first 30 to 38 days. And remainder just was in the last few days. So we would expect this number to be revised lower when the final print comes in May.
Okay, let me leave the discussion with a final statement to Dr. Sen and request his comment. So two contrary pieces of data that we are getting. One, the tax numbers that we got for November were excellent. The indirect tax numbers, obviously, the direct tax numbers have not been released. They will be known only for December. They are much better than previous months, previous November. The other number which continues to be good is power consumption. That's not fallen much in November, and what we understand from ground checks in December as well, power consumption hasn't fallen much. Does that ameliorate this, your scenario in any way?
Not really, because power actually, the relationship with GDP numbers isn't that strong.
Okay.
And even when it is strong, which is over the longer run, the causality actually runs from power to GDP rather than from GDP to power.
Okay.
Power is not a demand-driven sector. It is still a primarily supply-driven sector.
Okay.
So that's all right. I mean, it's a good thing.
Okay.
If power had suffered, we'd be in deeper problems.
Okay. Point taken, sir. I just wanted to know whether that was contrary data. Dr. Sen, Anubhuti, Shaumyo, thank you very much for joining us. Let's thank also Indranil Pan and Abhik Parwa, who have just disconnected. But that's a wealth of information we've got from our guests. All of them expect the actual data, the GDP number, to be lower than the advance estimates. As the Chief Statistician clarified, they have only taken the first 7 months data, which does not include any impact of demonetization. So in spite of not including those weak numbers, the GDP has fallen to 7.1% from 7.6% last year. With the impact of demonetization, our guests expect that GDP could fall from anywhere to 6% to 6.6. That is the highest we got. Anything else you wanted to add?
Well, no, Latha, you summed it up.
All right. Well, that's it on this special coverage of the GDP number. It's a disappointing number, even without counting demonetization. So we are probably going to give up that 7% big number that we were hoping for. Thank you for watching this special coverage.